US jobs growth has a record downward revision as traders turn their attention to inflation data for clues about the next Fed rate cut. And Australian consumer confidence rises again, while business conditions also firm. That's coming up in our 5 Things in 5 Minutes on Wednesday, September the 10th. And then in our deep dive interview, ANZ Economist Sophia Angala looks at what has been driving Australian trade growth since the pandemic.
Since 2022, what we've seen now is that services exports has contributed more to Australia's real GDP growth than resources exports.
But first, in 5 and 5 with ANZ, data overnight showed the US jobs market was weaker than indicated, following a record downward revision of non-farm payroll jobs in the year to March. ANZ economist Bansi Madhavani says while the direction of the revision was expected, the size, 911,000, was not. It meant only 847,000 jobs were created in the year, instead of over 1.7 million.
To put the size in context, the revisions imply that monthly job growth was roughly half of what was indicated previously. Fed Governor Waller had indicated that his estimates point to 60,000 fewer jobs per month, but the size of revision is in fact larger at around 76,000 fewer jobs per month. So the data will support the assessment that the labour market is slowing, and it does add to the signal that Fed will resume cutting rates in September. Currently, financial markets are priced for a 25 basis point rate cut next week and have priced in a small 20% chance of a 50 basis point rate cut.
As of 4 a.m. Sydney-Melbourne time, the S&P 500 and the Nasdaq were up 0.2%. The yield on 10-year US Treasuries was up 2 basis points at 4.066% as traders turned their attention to that inflation data. Gold was up 0.14% at $3,682. It hit $3,714 an ounce overnight, of course, a new record high. West Texas oil futures were up 0.77% at $62.73 US a barrel. The US dollar index up 0.3%, which saw the Aussie dollar down 0.1% at 65.86 US cents, while the Kiwi was down 0.2% at 59.26 US cents. Number 2. The ANZ Roy Morgan Australian Consumer Confidence Survey showed another rise of 1.3 points last week to 89.3. ANZ economist Sophia Angala says strengthening confidence in household finances led the rise.
Especially the 12-month financial outlook sub-index, which rose to its highest level since late April. And that sub-index is also the only sub-index to sit above that neutral 100 level, meaning in this survey last week, there were more optimistic survey answers towards a 12-month financial outlook than pessimistic ones.
Number 3. Business conditions in Australia also rose in August, according to NAB's survey. They were up 2 points to near their long-run level. However, business confidence fell 3 points after 4 months of improvement. Here's ANZ senior economist Adelaide Timbrell.
And we find conditions to be a little bit more stable as an indicator of future economic growth. So within indicators, we saw capital expenditure and forward orders lift. We also saw profitability and employment intentions improve as well.
Number 4. Adelaide says businesses' price indicators were within recent ranges, although there was some disinflation in final product and retail prices.
Labour costs, though, were still hovering around very similar quarterly rate than what we've seen in the last few months. Overall, the NAB Business Survey shows a likelihood of more economic growth from here, which is in line with ANZ researchers' forecast, with particularly the improvement in forward orders being a good sign of economic growth improving from here.
Number 5. The final clues for New Zealand's June quarter GDP were out yesterday, with manufacturing sales falling 2.9% in volume terms over the 3 months. ANZ senior economist Matt Galt says that was weaker than expected and more than reversed the 2.4% rise in the first quarter.
Part of it's probably general weakness in the economy, maybe some confidence impacts from global uncertainty. Some of it's probably temporary as well. Quite a lot of the weakness was in food manufacturing, which over the last sort of 5 years has been trending up and still is. There was a bit of retracement there as farm production in seasonally adjusted terms was a bit lower in Q2 compared to Q1.
Matt Galt there. Now, in our deep dive interview, ANZ economist Sophia Angala has looked at what has been driving Australia's export growth since the pandemic. She starts by reviewing the latest goods trade data to July.
In July, we saw that the trade balance in goods lifted to its largest surplus since February of last year. So that surplus widened to 7.3 billion. So rural goods and also non-rural goods. So that captures your commodity exports. Both those categories rose through the month, and that was likely supported by strengthening prices across those categories. Our non-monetary gold export values did spike to an all-time high of around 6 billion in July. And so far this year, we've seen that category around elevated levels just due to the increased demand for gold, given its position as a safe haven asset amidst global trade uncertainty. On the other hand, our import values declined 1.3% month on month in July, and that was driven by a 30.5% monthly decline in non-monetary gold imports through the month of July there. Overall, over the near term, that trend in export values is likely to continue as commodity prices are likely to soften over that period, but volatility from global uncertainty is likely to continue to be a factor on the trade balance.
Now, you've done some research looking at the contribution of Australia's services exports and goods exports to GDP since the pandemic ended. What did you find? I guess as those merchandise trade values are coming down, what did you find looking at the services side of exports?
So since 2022, what we've seen now is that services exports has contributed more to Australia's real GDP growth than resources exports and just the overall goods category. So over that period and since 2022, we've had the opening of international borders, and that's helped contribute to that recent strengthening in services exports, which has helped drive its contribution to GDP.
What other parts of the services economy are helping drive that services export growth?
Breaking down services exports contribution to GDP over the past couple of years, what we've seen is that in 2023 and 2024, it was largely those education-related travel exports that were contributing the most to GDP growth. So that captures all your spending from international students in Australia. On the other hand, other personal travel exports that captures tourism spending from holiday makers in Australia has increased since the opening of international borders, but it hasn't recovered to those pre-pandemic levels yet.
And then just looking at the goods side of the economy, what is sort of holding back that growth in goods exports over the last couple of years?
We did see that over the decade leading up to the pandemic, Australia's non-rural goods export, which captures commodity exports, did see some robust growth there, and that was supported by the lift in China's demand for steel as its authorities introduced stimulus measures focused on infrastructure. Over the past 5 years, there has been a slowdown in China's property sector, and that has led to an easing in China's demand for Australian iron ore exports. Australia's coal exports are also declined in volume terms, just following a ban that China placed on coal imports in 2020 as well, and that is still yet to recover to pre-pandemic levels since China lifted the ban.
Sophia Angala there, talking to my colleague Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, September the 10th. Catch you tomorrow with the latest inflation data from China. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.